From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 20th, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. Today is a U.S. bank holiday, and we may see the market remain pretty quiet, but you will want to make sure you make note of other events on your financial calendars as you go throughout the week. And as always, be sure to use appropriate risk management strategies in all trade setups. I have a couple of trades going at the very bottom of the chart. These two trades were entered late last week on Friday, so if you held them over the weekend, of course, they are still profitable trades. I set hard stop losses on them on Friday before closing out trading for the week, and they still remain profitable even today with those stop losses in place over the weekend. So if you're holding them, protect profit. If you're not, then we'll look for some new opportunities as we go throughout the week this week. Let's go ahead and turn that trade window off, and let's start going through each currency pair. USD, CHF, dollar franc. We're looking at the daily time frame here. Last week we saw the market go really in both directions. We saw the first part of the week go up, middle part of the week go down, and then the last part of the week go back up again. So it was kind of a turmoil here on this currency pair. Interesting is that it's toying around, been around the parity level 1.0. That's the yellow line in the middle of the pink shaded area. We see the 100 period moving average also being somewhat of an area that the market is finding as a midpoint, where it's been support on top of it, resistance underneath it, and just been on both sides of it. And even the last 3 days of last week, or last 2 days of last week and today, sitting right around that 100 period moving average. Let's zoom it in a little bit. And there it is right there. You can see it. Support back here in the blue box, resistance underneath it down here, and then we're toying around with it again today. 1.0040, 1.0060 is our current resistance. That's the yellow shaded area. Look at the resistance here. And so we know that there's possibility of resistance now. So as long as it's underneath, and we'll call it really the top of that yellow zone, 1.0060, which is where all these candles found resistance right here. As long as it's underneath that yellow zone in that 0060 level, I would say there's resistance for the dollar franc, and only if it's able to significantly break above that green zone do we look for it potentially, or sorry, yellow zone, do we look for it potentially to rise towards the green zone as our next resistance. Again, it is a bank holiday. I'm not sure we'll have enough momentum to break through here, but if it does, with lower liquidities, less traders maybe in the market, we might see a surge towards the green shaded area. Support is, of course, now the pink shaded area. That is 1.0015 down to that parity level, 1.0. So there's your support. If you're looking for a buy scenario, obviously buying at the pink zone or above the yellow zone is going to be your best opportunities. If you're looking to go short, the yellow zone looks pretty good for that, but know that last time it found resistance there, but spiked all the way to the 1.0115 level. So be careful on the shorts because we could see a spike like that. But definitely, if you're looking to go short, the yellow zone or the green zone are your areas to watch for those opportunities, or the pink zone as a buy scenario for the dollar franc this week. Let's take a look at the euro dollar, EUR/USD. We're in basically a very similar situation. We've been significantly underneath the 100 period moving average. We've been falling for the past, almost 20 days now. The month of February, we've been predominantly in a bearish trend along that red trend line. It is interesting on many of these currency pairs, you'll note that the Forex Black Book has yet to shift its momentum indicator. This is bullish here. Green is bullish, red is bearish, is bullish here, but the market's been predominantly going down. So it hasn't gone down enough for that indicator to shift to a bearish price action. It doesn't mean it can't continue to go down, it just means it's interesting that the algorithm hasn't indicated bearish price action enough to change it over to a bearish bias. So interesting there. We'll keep an eye on that as we go through our week. Let's go ahead and zoom in a couple of times here on the daily. Obviously, the green shaded area up there where the red trend line is your current resistance. That green shaded area is 1.0650 up to 1.0670. So if you're looking to go short, obviously, that looks like a pretty good place to do it. Or the next time to go short would be a breakdown, which it really hasn't done yet, underneath the purple shaded area. It's finding support back here, finding support here. So we need to break down 1.0585, 1.0605 is the purple shaded area. So if you're looking to go short, back in the green zone or under the purple zone. Now, if you're somebody looking to go long, as long as it sits on top of this purple zone, obviously we have seen a good deal of support. That becomes a potential opportunity to take it back up towards the green zone. Of course, if it ever breaks back above that green zone, we'll look for the return of the upside for the euro. But right now, with the movement that we saw on Friday, no real significant U.S. news really throughout the week except for FOMC meeting minutes on Wednesday. We could be looking for this to continue to go bearish if it breaks through the purple shaded area this week. Take it on over to the GBP USD. We're in somewhat of a contraction or consolidation pattern. We started looking at it like this last week. We're clearly underneath the 100 period moving average and have been. We've tested underneath it multiple times and stayed underneath it. We do have fundamentally a bearish bias here for this currency pair, but so far today it has pressured back higher from the support level. Take a look at these two blue trend lines over here, somewhat of a triangle or contraction or consolidation pattern. What's probably most interesting about that, if I zoom in one more time, is that we're coming back up towards the top of that pattern, which for the day and this week will be closer here towards the orange zone. That's 124.75.55 is that orange shaded area. Last week we found resistance around the green shaded area, which is 25.17, 25.35. So orange, green zone, top of this consolidation pattern. The yellow zone, 1.2420, 1.2390 is your current support. If it's going to go lower, what needs to happen? It needs to break through that yellow shaded area. So if you're looking to go bearish on GBP USD, green zone, orange zone are your resistance. Under the yellow zone goes lower. Obviously, today we have found support at the bottom of our contraction triangle or our contraction pattern. It is above the yellow zone and challenging that orange zone. So obviously, this is not the place to go long. You don't want to go long under that orange zone. It's been resistance before. You're at the top of the pattern. Going long right now just doesn't seem like a logical scenario. So at this point, I would say, if anything, you're looking to go short at some point on the GBP USD over the next couple of days into resistance. Let's take it on over to the USD CAD. This one quite a bit back and forth last week, and let's just zero in on the last week. Let's just take it in like this, and I'm going to draw in a box here on the chart. Give me just a second to change this over to a box. I'll make it black and hollow the box out. There you go. So take a look at last week, and really this week so far we're stuck in between the orange and the yellow and the pink zone. 1, 2, 3, 4, 5 days of last week, and so far today we have been stuck inside here. So what we really need to see, if we're going to see some significant movement for this currency pair, it needs to either shift direction and break above the yellow zone and start working its way higher, or return to the downtrend, break under the pink zone, and go lower. So we need a breakout of this zone of congestion or range, whatever you want to call that little black box. It needs to get outside there before we can have our next real significant market movement. Stronger U.S. dollar sends this higher. Weaker Canadian dollar sends this higher. If it's the opposite, weaker U.S. dollar, this goes back down. Stronger Canadian dollar, this goes back down. All of that are things we'll be looking for as we go throughout the week. We have some news out of a little bit of news out of the U.S. We have some other news out of Canada this week, so we'll definitely keep an eye on that for some direction here for the dollar CAD. But right now, we have been stuck inside this black box, underneath it as resistance and above it as support at the pink shaded area. If you're looking to go short, if you're looking to sell it, you're probably at your best opportunity this week to do it here into the 131 level. If you're looking to go short, if you're looking to go long, I think you gotta wait for it to break above 31.15 or so, which is the top of the yellow zone. Take it down to the 4-hour time frame just to get a little bit of a zoomed in view to that black box. There it is. And it doesn't change it, does it? You know, if you're looking to go long, you're at a difficult place to do it because we are at resistance. If you're looking to go short, obviously we need some breakdown. Even if you were to take this black box and square it in just a little bit more, just take a look at that yellow zone, how it's been stuck inside of there for a while now. So it either needs to get above or below that yellow zone on an intraday basis before you can have some confidence in direction for the dollar CAD. And by the way, for those of you that were following late last week on Friday, we did have a short going here into the bottom of the yellow zone. I was able to get out of it with break even before the market closed, so I did not hold that one over the weekend. Let's take it over here to the U.S. yen. U.S. yen, we have been primarily so far for the year of 2017 in a downtrend. That's the blue trend line. Forex Black Book is red. That also implies that. But we're in an interesting area down here at the very bottom of that blue trend line. Let's go ahead and zoom it in one time. And really, I'm just going to take this blue box right here and pull it out like this. So take a look at this blue box that's on the chart. We see resistance and support. Support at the purple zone, resistance at the pink zone. We've made a dip down here underneath, and let's just go ahead and expand this out a little bit like this. So we saw a dip down here underneath the blue box inside the black box. We touched the green zone, the green zone, the green zone, then bounced back up, and now we're sitting above the purple zone, which, by the way, over here on the left was support. Take a look at this. Right here with the black X is here. Right here with the black X is here. So we've seen support there. Well, last week we saw it dip down into there as support again on top of, by the way, the blue trend line. So when we saw it do that, we took the long. And by the way, that's one of the trades that I held over the weekend. That's this one right here, sitting 112.70 was the buy, and we're currently sitting 45 pips of profit on that trade. That's from the purple shaded area at the bottom of that blue box. Let's go ahead and zoom it in one more time. There it is right here, purple shaded area, bottom of the blue box. Let's put an arrow there. So we bought it there into support, historical support, top of the blue trend line, have seen an opportunity to see profit all the way back up to the orange shaded area. Obviously, this orange zone is resistance. Don't buy it now. We don't want to buy it under the orange zone. It would need to break above the orange if we were going to look for another opportunity to go long. Just take a look right here. We found support at the purple zone, resistance at the orange zone, 1, 2, 3 days. Eventually broke underneath it, went lower, but we need a breakout, either above the orange zone or below the purple zone, before we'd look for our next trending move for the U.S. yen. So right now, likely with very little news on the calendar for the day today for the U.S., we will see it bounce around. Potentially, we'll see it bounce around between the orange and the purple zone today. If you're in profit, protect it. If you're not in profit, wait for the right opportunity, either at the orange zone or purple zone. If you're looking to go long, obviously the purple zone or above the orange zone. Looking to go short, orange zone may make some sense for an intraday basis for the dollar yen. Take it over here to the AUD/USD uptrend. Not too hard to see that, but we've been struggling up here to continue that uptrend at the very top of the trend, top of the blue trend line. It's been struggling to continue that uptrend. We even last week had some good news out of Australia. It was a temporary push higher, and they came right back down inside the black box and under the blue shaded area. Let's zoom it in one more time. Blue shaded area obviously is your resistance right now for the Australian dollar. That is 76.80 up to 76.95. So that is obvious resistance. So underneath that blue zone, very difficult place to go long and buy the Australian dollar. Very difficult to do that under the blue shaded area, because obviously so far we have found much resistance underneath there. So if you're looking to trade this at the top of the trend, remember this buy low, sell high. If you're at the high point, maybe makes more sense to go short or sell. So up here into the blue zone, that might make sense, especially if we start to see the breakdown of the trend line, maybe even a breakdown of the orange zone begins to give us some higher hopes for some reversal here for the Aussie dollar and back down towards the purple zone, or of course a breakdown of the purple zone, we might even look for it to go lower. And only really if we get a significant breakout higher. You know, if we're looking to go long in the direction of the trend, you want to do it at support. That would be at least at this point the orange shaded area or back above the blue shaded area. Let's take it down to the 4-hour time frame, and you can see what's happening over the past several hours. Take a look at that. It's just kind of stuck under the blue zone as resistance. That's what you would expect. We're stuck above the orange zone as support. That's what you would expect. So really we need a breakout for a trending direction, but take a look at this, how it's walking right up that trend line. So if it gets through, let's say 76.70, 76.60, that back down here to 76.55, not very far down. So it's not really a viable scenario to short it underneath 76.60, but if it's back up here in the blue zone, that might provide your best opportunity to do that for the Australian dollar today. And really going long, it would have to get back above the blue zone before that becomes a viable scenario. Back over here, New Zealand dollar again. We'd have the short going. Let me just bring that back up really quick. Here it is down here at the very bottom of the chart, 72.20. That is from last week, setting 37 pips of profit. Let's go ahead and take it on down. Zoom it in here on the daily. a couple of times. We saw the downtrend, went into congestion. Take a look at that area. By the way, let's just take this black box from back here and put it right about here. We're in the congestion zone, aren't we? So if you're looking to go short, obviously the best place to do that is the green zone. That's where I'm in the short from last week. That became the opportunity to go short. Next opportunity to go short, back at the green zone or under the yellow zone, which is 71.65, 71.80. If you're looking to go long, maybe you're at the best place to do that for the day today. Just be aware that the market has been particularly bearish over the last 3 days. So going long right now, watch for clues to support reversal from 71.80, 71.65, target the green zone, and of course above the green zone we could look for it to go higher. But right now, not a great place to go short. If anything, you might be looking for support and resistance opportunity, or sorry, support and reversal opportunities for the New Zealand dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.